Okay, so this morning we'd like to give you a quick update on the natural gas market. It's been one of the worst performing commodities over the last couple of weeks, so there's a lot of attention on it, or maybe there's not even enough tension on it, or at least the wrong type of attention. Before we get started, just want to make sure everyone understands there's substantial risk of loss in trading futures and options. It's not suitable for everybody. So we noticed something interesting on the last COT report that we'd like to focus on today. Now, we understand the bullish arguments for natural gas from a fundamental standpoint are few and far between, but that might be exactly why natural gas is a market to take a look at. In fact, we think it could be finding a low, maybe even just a temporary low, but a good substantial low sooner rather than later. Anyone that's ever looked at a long-term chart of natural gas knows that this is a feast or famine market. It's not the type of commodity that you buy and you hold on to for months or years. That's just not how this market trades. It's all or nothing. We're either trading at $5 or we're trading at $2, and not a lot of in between there. We've noticed that the futures price is creeping around the $2 area, which is the multi-year low. At the same time, we've noticed that the COT report is suggesting that speculators are holding nearly net record short positions. So prices are near an all-time, I don't want to say an all-time low, let's just say a long-term low, because we've definitely been lower than $2. In fact, 2016, we were in the 160, 170 area. So it can go lower, but let's just put it this way, we're cheap. And we're cheap at a time in which most speculators are already short. So most speculators have probably already expressed their opinion in the market by going short or by selling the futures. And when you get these two phenomena colliding, what normally happens is a really big short squeeze. And those types of things can happen regardless of fundamentals. Doesn't matter what the supply-demand scenario is. If everybody's short and suddenly they feel like they need to get out, the market makes a move higher. So specifically, according to the latest Commitment of Traders report, which is the COT report issued by the CFTC, the Commodity Futures Trading Commission, there are roughly 200,000 net short futures contracts being held in natural gas. This is substantial, and like I mentioned before, it's near record lows. We saw this scenario once before. We saw it in 2015, 2016. At that time, the market finally found a bottom. We made a run from $1.60 to nearly $4 in natural gas. We're not necessarily expecting $4 anytime soon, but it's realistic to look for $2.50 or $3. We must not forget that natural gas futures were trading near $5 just late last year, and even in 2019 we've seen $3 prints. So those that are aggressively short the market here with the futures price trading $2.10, $2, are probably getting a little bit greedy. In our view, the downside potential is far less than the upside. Of course, we should point out that the seasonality for natural gas is actually weak for the next 4 weeks or so. Generally, the market doesn't find some sort of a bottom until September. So be careful. There's no guarantees that the market's going to go straight up from here because, as I mentioned, we have a month of seasonal tendencies which are actually bearish. So what we need is for those that are short the market to have some sort of catalyst to get out of the market. And if that happens, and I shouldn't say if, but when that happens, eventually it will, we should see a massive upward thrust. So if we take a look at the daily chart of natural gas, we can see that the indicators or oscillators, whatever you want to call them, such as the RSI, Williams %R, they're falling into oversold territory. This doesn't necessarily mean that something's going to happen immediately, but it does give us an idea that perhaps maybe the market has come a little too far, a little too fast. And in addition, we're coming up against some support. This is roughly where the market bottomed out a couple of weeks ago. If we break below this, we wouldn't be shocked to see 190 or so in natural gas. But the reality is somewhere between 210 and 190, the market should find some pretty good flooring. So in a nutshell, although everybody assumes that natural gas is going to continue lower, the trend is your friend, right? Well, it's not always your friend, especially if everybody's already short. So just be on notice that perhaps the market's a little too short. Speculators might have too many positions all in the same direction, and thus we could be probing for some sort of a low. If you want to learn more about commodity trading, we have a ton of free information on our website. It's decarleytrading.com. We are a futures and options brokerage service. That's how we make our living. So we provide educational material to make sure that our brokerage clients understand what's going on in the markets and have a good idea of the risk and reward and that sort of thing. We've also written multiple books. The book I recommend to most traders is Higher Probability Commodity Trading. You can find it at Amazon or any of the major book outlets. And if you have any questions, comments, or concerns, we are DeCarley Trading. We'd love to hear from you.